Emira Property Fund is a property unit trust, colloquially known now as a real estate investment trust, or a REIT, that's listed on the Johannesburg Stock Exchange. Our assets are approximately 11.7 billion rand, with a market capitalisation of 7.5 billion rand, with a diversified portfolio of offices, retail and industrial properties. We've released our final results for the 12 months to June 2014 today, and they have been very, very well received, and we're very proud of them. The summary of the results, really, the highlights as we can see them, is distribution growth was up 7.5%. That's a substantial improvement from where we were about 3 years ago when distributions actually went down. So we're very proud about the growth, which is in excess of inflation. Secondly, net asset value per share rose by 9.2% to 14.47 rand. And effectively, this means that if you take into account the dividend that is currently in the Emira share price, we're trading at a discount to net asset value, which means that Emira is offering value at the moment. Thirdly, vacancies, which is a major measure of performance within the listed property sector, currently stand at 4.5%. 2 years ago, those vacancies were at 10.2%. So effectively, in the last 2 years, we've managed to more than halve our vacancies, and that has a benefit on our top line, on our revenue growth. Fourthly, tenant retention, which is an important metric in terms of keeping our vacancies low and keeping our revenue growing nicely, improved from 78% to 80% this year. 2 years ago, that was 65%. So clearly, from 65 to 80%, we've had a great tenant retention year, which is very, very positive as well. Acquisitions and disposals, we haven't just necessarily been focusing on the inherent performance of the fund. We've also been trying to grow the business. In the past 12 months, we have successfully concluded or about to conclude 1.6 billion rands worth of transactions. 706 million rands worth of properties were transferred to Emira in the 12 months to June, and we have a further 900 million that are currently in the process of being transferred. And the average yield on that 1.6 billion rands worth of acquisitions is 9.1%, above our cost of capital, and will be earnings enhancing. The acquisitions, we're not just limiting ourselves to growing the fund, we're also at the same time getting rid of our non-core assets. Disposals of 313 million rand were actually concluded during the period, with a further 188 million rands worth of disposals in the process of being transferred. That brings the total value of disposals to 500 million at a forward yield to Emira of 7.9%. So essentially, we're taking 500 million rands worth of disposals at 7.9% and reinvesting that money in that, as well as new debt and equity, in 1.6 billion rands worth of acquisitions at over 9%, making the transactions earnings enhancing. Capital expenditure, we're not just buying and selling, we're also expanding the portfolio by refurbishments and extension. Projects worth 744 million, a total of 25 different projects are currently underway, and that is how we're improving the quality of the portfolio and growing our business as well. And then finally, from an outlook perspective, one of the highlights for this year is clearly that set us up nicely for the coming year. So FY15, we are expecting to be a good year. We should show similar to hopefully better distribution growth, and clearly that is what our investors are buying into Emira for, is inflation plus growth, protecting you against your inflation and also growing from a capital perspective. And really, I think the outlook, the sort of specific financial outlook for the coming year is assuming there are stable economic conditions. So we put a rider to that, so obviously nothing material happens that changes our view, but we expect good growth in distributions per share in the coming year. There are one or two things that will assist that growth over and above our expectations there, our core expectations, and at the end of the day, we should be showing real growth in distributions in the coming year once more. And if you look at analyst consensus forecasts for the sector and for Emira, Emira is trading at a forward yield of 9.5%. The sector, rest of the listed property sector, is trading at 7.5%. So we're offering inflation-beating growth, probably market-related growth, and if not better, with a much higher yield. And so we're very positive about the outlook for our operational performance and for the share price in the coming year.